How's it going, everyone? Welcome back to another Spectre video. In today's video we'll be covering ICT's market structure shift, how to find a high probability market structure shift and how to validate it. So what validates a market structure shift? So there are three important elements to a valid market structure shift. The first being higher time frame context. We need higher time frame context to understand where the shift originates from. Without higher time frame context, a MSS is useless. There's no reasoning as of why it should hold, so don't expect it to hold without a higher time frame context. So the second step to validate your MSS would be displacement. Displacement shows us where smart money is currently involved in price and where it wants to navigate price towards. Without displacement, your MSS is practically useless. The reason why displacement is so important is because it shows us a willingness in price to displace or push towards a specific higher time frame price level. So without displacement, your MSS has low conviction, right? You want to be very confident that your shift will hold with big bodied candles. Now the final point, which in my opinion is very overlooked, is time frame alignment. So with time frame alignment, all we're doing is making sure that our entry confirmation or the MSS makes sense given the PD array that we are working off of. So what does that mean? So if we have a daily PD array, we are not going to look for an entry confirmation on the 1 minute blindly. The reason being is that a daily PD array is very big in size in comparison to the 1 minute candles, right? So a 1 minute market structure shift does not hold much weight given that price is delivering from a daily PD array. We would opt to use something higher such as the 1 hour time frame. Using a 1 minute entry confirmation off of a daily PD array is extremely aggressive and you're more than likely to get stopped out numerous of times before price actually heads into that correct direction. So now that we have that information, let's actually dig into time frame alignment and what makes sense. So here we are. Off of a daily PD array, you should opt for an hourly market structure shift. This is a nice conservative approach, so when price enters a daily PD array, such as an order block or a fair value gap, we will then go down to the lower time frame, being the hourly time frame, and that's where we will look for our market structure shift. So similarly to this, if you're using a 4-hour PD array, we will then hunt for that MSS on the 15-minute time frame. And if you're using an hourly PD array, we will use the 5-minute time frame to look for a market structure shift. So now that we have all of that information about time frame alignment, how do we make the displacement mechanical? So there are 3 simple steps that I use to make displacement as mechanical as possible. So the first one is by using a candle closure. So when price moves below a low or above a high, we have to do it with volume and a candle closure, right? What does this mean? This means that when you see price trade below a low with a wick, we should just disregard that, right? We wait for the next candle to print and wait for a closure, nice and clean below the low. Similarly, for a high, we want a candle to close above with a closure. If it's a wick, we will disregard that candle and we'll wait for the next candle to print to see if we can print above with a close. Now the second component for mechanical displacement is to have an FVG created. So if we are bullish, we expect a bullish fair value gap to be created. And for the final step, we have large candles. What do I mean by large candles? When we are trading off of a bullish PD array, we want to see large bullish candles closing above old highs, right? This indicates that price is moving impulsively to our intended draw on liquidity. So those are the 3 important steps that I want you guys to look for when hunting for your market structure shifts. That's how you identify displacement, right? So now I want to actually hop into an example and show you guys what this looks like. Here is the diagram. So this is a valid market structure shift. So let's begin with the left. We can see we have a high that I've highlighted labeled as an ITH, which stands for intermediate term high. What is an intermediate term high? An ITH is simply a high that has rebalanced a fair value gap or a high which has 2 short-term highs on either side. So in this case, I want you guys to focus on a high that rebalances a fair value gap. So as you can see, we rebalance that fair value gap to the left. Price then trades lower into a higher time frame PD array before we displace higher and get a closure above the intermediate term high. So going back to them 3 steps for mechanical displacement, we have large candles, we have a clear body closure, and we have a fair value gap created, right? So once we have that fair value gap created and a body closure, I am more than happy to look for buys from this area, right? This fair value gap provides a nice clean opportunity for a long. So that is a textbook example of a market structure shift. Now, just to add some context to this, let's say that higher time frame PD array is a 4-hour PD array being an order block, then the current time frame being shown on your screen should be a 15-minute market structure shift. It's very important that you guys are using time frame alignment to ensure that your MSS actually holds value and isn't irrelevant. So unfortunately, that does wrap up today's video. It was a short one. If there are any questions, feel free to ask in the comments or DM me on Instagram or Twitter, and I'm more than happy to answer that for you. This is a relatively easy concept, so just get good at spotting this with those 3 steps I provided, and it should be very easy for you guys. As always, thank you guys for watching. Please leave a like and subscribe if you enjoyed the video, and take care. I will catch you in the next one.